Big news for anyone with a mortgage or looking to buy a house in Australia. The game has completely changed in just a couple of weeks. Remember when everyone was talking about interest rate cuts? Well, forget that. Financial markets are now betting with 100% certainty that the Reserve Bank will actually hike rates in 2026. So, what's going on? It all comes down to inflation. The latest numbers show consumer prices jumped to 3.8% in the year to October. That's way higher than the RBA's target of 2 to 3%. The economy is also picking up steam, and household spending is on the rise. Because of all this, the market now thinks the RBA won't be cutting rates anytime soon. In fact, they are pricing in the risk of a rate hike from as early as February. This is a huge deal, especially for the 85,000 first home buyers who jumped into the market this year, enjoying those 3 rate cuts we had in 2025. Now, they are facing the possibility of higher mortgage repayments. Experts are already seeing fewer banks offering home loans with rates below 5%, and they expect fixed rates to start climbing. Speaking of fixing your rate, is now the right time? One expert, Sally Tindall from CanStar, says it wouldn't be the silliest idea. If you can lock in one of the lowest fixed rates available, it might save you money down the line. But the most important thing is to shop around and find what works for your personal finances. Now, let's talk property prices. Those rate cuts we had earlier really fueled the market. First home buyers rushed in, and investors flooded back, pushing affordability to record lows. Westpac analysts were predicting an 8% rise in property prices nationwide next year, with cities like Brisbane and Perth possibly seeing a massive 14% jump. However, this new outlook for interest rates is throwing a bit of cold water on that fire. Instead of a 9% national rise, the forecast is now a more modest 6%. That's still a significant increase and not much comfort for those trying to get into the market. So what's next? All eyes are on the Reserve Bank's final meeting for the year. Most analysts think they'll keep the cash rate on hold at 3.6% for now, but they'll be listening very closely to see if the RBA pushes back against the market's aggressive rate hike predictions. Not all economists are convinced a hike is coming, though some, like AMP's Shane Oliver, think the markets are overreacting. He points out that unemployment is slowly rising, and consumer spending seems pretty fragile, relying heavily on discounts. So while a rate cut is off the table, a rate hike might not be a sure thing either. It's a classic case of wait and see. What do you think will happen? Are you considering fixing your mortgage? Let me know in the comments. Thanks for watching, and don't forget to subscribe for more updates.